Swiss property prices have risen to record highs in recent years. Low interest rate and foreign investment have sparked a building frenzy. Today, I'm joined by Pierre Zimmermann, founder and CEO of Reggie Zimmermann Property. Hi Pierre, thanks so much for joining me today.
Hi Kate.
So the term overvalued is being used quite a lot in reference to the Swiss property market. Do you think this is actually the case?
There are many markets in Switzerland. So one market we speak a lot is individual flat. It's true that individual flat have risen to very high price, and in my opinion it's overvalued and the bubble will deflate. But there are other markets. You have building for investors which are significantly lower in price, and you have a whole section of commercial, especially industrial, which has not followed up and which is still undervalued. So you have free market, and I think we are protected by this very low interest rate that you mentioned, and which are due to continue for another 2 or 3 years. So I don't expect that the bubble bursts, say, next year, but in a 2015 horizon, it might be not very nice to see that.
At a time when a lot of Europe's property markets are actually struggling, Swiss is experiencing record highs. Why is this?
You have to see that the Swiss market has been deeply undervalued for probably 20 or 30 years, because the most important segment, the residential, has a total ban or close to total ban on foreigners. So in a market where only 7 million people out of 7 billion on this planet are entitled to buy, you had really huge return. And still, compared to the quality of the building, because the law pushed toward a high quality, selling at 5 or 6% growth is a bubble compared to the 8 or 10% that we saw. But it's probably that the 8 or to 10% that we saw were a once in a century thing, which developed between 1992 and 2000. So I think it's an increase, but from a very low base.
The borrowing costs on Swiss properties are currently at an all-time low. How long can this last, and why is that?
So the borrowing costs are very low because the Swiss bank has to defend the currency from appreciating. Most people have the opposite problem, but the Swiss have a problem to prevent the Swiss franc from climbing too much. Last year we reached the parity versus the euro, and this was for the export industry clearly not possible in terms of defense of workplace. So how you defend a currency from appreciating? You diminish the yield and you push to zero. So this was exaggerated low interest, but we always had in Switzerland much lower interest rate than the euro or the other currency. To the question, can it last? You have to see, if we take, for example, for the real estate, how a price is fixed on a loan. You have two components. You have an interbank rate for the given period you want, and you have a margin. And the cumulation of the two gives you the price. So on the price of the interbank rate, probably to all the liquidity measures that are given by the ECB and the Swiss National Bank, you will have for a couple of years low interest rate. Now we have a 5-year interest rate at 0.5% around, which is an historical low. And this is for a couple of months. What is going to increase faster is the margin that the bank takes. Until 6 months ago, the bank would take 50 to 60 basis points for their good customers, and there was a fierce competition, and many were going as down as 35 to 40 basis point only on a multi-year contract also. And now with Basel III coming, they have to put more equity because they compute risk-weighted assets, and for each franc of risk-weighted asset, they have to put some equity. So they are increasing the margin, and also Moody's, when they mentioned to the Swiss bank that they might downgrade them, they say, your margin on this loan are just insufficient, and you have to increase. So now, on the last 6 months, we have seen a lot of banks going all the way over 100% basis point. And even when you are very well connected, you have usually gone to 70–80% basis point. So for the final user, he will not notice that much because he doesn't see these two parts. And in fact, the increase of the margin has been offset by record low in the interest. But the record low will move in 2 or 3 years, but the margin of the bank with Basel III will increase. So I think we are going to see increases, but not significant increase, because if we take, say, 30 or 40% more basis point for the bank, it's still that you can lend to 1.5% for 6 or 7 years, which is still very good when you purchase an asset at 5% gross, which means after expense about 4% net.
Some people are comparing this market to that of the US in the early 2000s. Do you think there are similarities?
I think no, because the risk of explosion comes mainly when a lot of people cannot pay the interest bill. And since the interests are so low, even if you overpay currently a building, you will have a huge positive cash flow, allowing you with no problem to pay all the interest and amortization. I mentioned today we have reached a record high, and we sell probably for 5% gross, 4% net. Even if you borrow, with 100% debt, which the bank will not accept, still 1.5% you pay to the bank, 4% you have from your underlying building, you have a 2.5% gross margin, which is more than sufficient to pay. So today, what we call Office des Poursuites, which treats these kinds of bankruptcy or payment problem, they are on record low in terms of buildings which are for sale, and they go for very expensive in this auction because there is just nothing to buy, so that sells for very good price. And in the US, it's different because you have auctions, one after the other, and you have just too few buyers and too many products arriving. Actually, we had this problem in Switzerland about 20 years ago, 15 years ago, because there were very high interest. We were reaching 7–8%. So everybody was burst because they had the same 4% gross, and they have to pay 7% or 8%. They cannot foot the interest bill, and they are foreclosed. But here nobody is foreclosed because you really need to let a building empty, not to have enough money to pay the bills.
Finally, for anybody looking to invest in Swiss property at the moment, what advice would you give?
So the first advice is avoid all PP objects or small villa. There is an acute shortage of housing, so people are just overpaying to have a flat or to have a villa, and they don't make the calculation on a long-term interest rate, but they say, okay, now I pay 1%, 1.5% for a multi-year loan, so it's profitable at this level. And they don't realize that if the market goes up, they will just be strangled by the price they paid and the heavy debt they take on. So avoid PP object is advice number one. Advice number two, take either buildings, residential, and take good location, but this is a worldwide advice. I would consider today to buy commercial and industrial, because currently nobody wants, and this type of assets sells now very often for half the intrinsic value, when on the other hand, when you buy a building for residential purpose, you will pay a huge premium on the intrinsic value. So I think there is a risk, but there is much better return, and there is an asset protection, and I have worked formerly as treasurer, and as a treasurer, the intrinsic value for me is very important when you consider the long run.
Well, Pierre, thank you so much for joining us today. A great insight and some great advice there as well. If you want to see more exclusive interviews just like this one, stay tuned to DukascopyTV.